If you're a loan officer and you're losing deals, it's important to understand the pursuit of mastery in your business is about understanding each milestone that your home buyer goes through. And if you can master each one of these, I'm telling you, you're gonna feel like Keanu Reeves in that part in The Matrix where he's just going super slow and blocking the bullets. You're gonna feel like this is a cheat code, okay? So let me break these down to you. You work so hard to generate leads, right? You go out there, you meet with realtors, have coffee with them, you're persuading them to send you business. Well, once the lead comes in, it's showtime. The first step that every single borrower goes through is when they get referred to you is lead to consultation, right? You get the lead, you got to get to that lead quickly and schedule a professional initial loan consultation, right? This is where first impressions matter, okay? From there, you're hopefully going to get that home buyer pre-approved and they're out there looking for homes. And once the contract comes in, you have to have what's called a rate lock consultation. This is the most important point of sale. It's where everything comes to a head and it's a matter if you're going to lock that loan and get paid or not. But the magic to this is how well you do this and this, because success begets success. Once you close that loan, this is where so many loan officers do not protect their long-term residual income, right? The relationship starts when the transaction ends, not when it starts. Once the loan closes, how you follow up with that client immediately and future frame follow-ups create a moat around them so other loan officers don't creep into your database, right? And protect your future income. All happens at this post-closing consultation. Now, out of sight, out of mind, right? If they don't hear from you at least once a year, they forget about you, right? Your database is under siege every single day, right? And the way to protect your long-term residual income is the annual mortgage consultation. So what I'm gonna do is I'm gonna give you an overview of each of these, right? And by the time you are done watching this, you will 100% find better ways to protect your income at every single stage. Now, here's the cool thing. If you click the description below, I'm actually giving you this entire playbook for free $99. It'll get emailed to you, print it, keep it on your desk. And if you get obsessed over it, just like I did, you will start to get more confidence. And the most important ingredient in your business is confidence. Because when you have confidence, you can speak with conviction, and that's attractive to your borrowers and clients and referral sources, okay? So now why listen to anything I'm saying? Because when I first started, I thought my charm and my personality would help me win in each of these sections. I didn't even know each of these sections. And I was losing business to other loan officers that were not as good as me, right? But once I learned this and I mastered it, I ended up doing $1 billion in home loan production, and I'm barely in my 40s. And now I get to share with other up and coming and active top producers. Now listen, the key when you watch this is to hang tight, because everybody gets excited about these three, but the real magic happens here in stage 4 and 5. But if you don't understand these three here, it's like baking a cake. You miss one ingredient, it won't taste right. These all work in harmony together. Let's go. Okay, so let's start with the first point of sale, which is the lead to consultation, otherwise known as the LTC. Now look, you've worked really hard, right? You've gone out there, you promoted and prospected, you marketed and sold, you're convincing people, you're persuading them to refer you, a home buyer. You have to take care of that. It's a newborn baby, right? Just like a newborn baby that's born, you gotta get to it quickly and care for it and triage, right? So in the playbook, right, what I talk about first and foremost is you have to be clear that there is different sections of referrals. A lead is someone that's interested, that you have their basic contact information, okay? A prospect used to be a lead. This is someone that's actually applied with you, right? And you have their complete contact information. They're getting closer to where you want them to be, which is a customer. Now, what's a customer? They've transacted once, but they haven't referred you anybody else. They're not a raving fan yet. You want to take great care of these people because about 30% of them become clients, Hall of Fame people in your database that transact multiple times and refer you other people. The goal is for every customer you close is to convert 30% of them into clients. So your dependency on realtors only decreases throughout the journey of your career. But how you get them here is how well you master these 5 points of sale, okay? So let's get right into it. Now, you've worked hard, okay? You've generated the lead. The 3 sub-ingredients to mastering this node or this milestone in the timeline, first and foremost, is how fast you get to the lead, okay? It's how fast you get to this lead. Very, very, very important. Now, what does this mean, right? You've all heard speed to lead, speed to lead, speed to lead. It's been proven that conversion rates almost 2x based on who talks to the lead first. So you have to get to that lead when it gets referred to you, in my opinion, in less than an hour tops, especially if it's organically referred. If it's non-organic and it's through paid content, you got to get to that within seconds. You understand? So your speed to the lead is very important. Second is your speed to need. Now, what does the word triage mean, right? Not everybody is a rush. If you get a new home buyer, you want to triage their urgency. The problem with a lot of loan officers is they think that that home buyer wants to buy a home tomorrow. Some of your realtors will call you on a Sunday and say, you got to call this buyer. And when you call, the buyer's like, I'm in a lease. I'm not looking to buy for another 6 months. So you have to properly triage, okay? Now, speed to meet, you have to get them scheduled on your calendar. Now, this is where a lot of loan officers get confused because they say, Amir, if I reach out to that lead, shouldn't I be doing the initial loan consultation there? No, you have to split these two up. Here's why. Number one, when you are a desperate loan officer, you want to call every single lead you get and you want to just immediately take care of them. That is not how a high professional business is run. And secondly, that lead and that home buyer will feel your desperation. They don't feel like you're busy enough, right? And your energy is very low and very inferior. You're running a professional business. Imagine if you called a doctor and he just stopped everything he was doing to treat you. You don't have the aura around that. Even if you're not busy and this is the only lead you've gotten, you have to act as if. You have to run a professional organization. You have to tell the lead, it's great to connect with you. Who referred you so I can properly thank them? Are you making an offer on a home tonight so you can properly set expectations with them? You say, look, you caught me in a meeting, but I want to give you my undivided attention. Can we schedule a time tomorrow or the following day, right, where we can talk about your goals? It's all about the finesse, right? But no matter what, we got to get to these 3. The key word is quickly, though. We got to get to every lead quick. We got to navigate what their needs are, and we have to get them on the calendar, okay? From there, that is going to be an important process, right? Because we're going to be able to get them to your initial loan consultation, right? And I have this all broken down for you guys in the playbook of what you do in that point of sale. All right, now that you got into the lead quickly, you've triaged their need and their timeliness, right? And you've scheduled the appointment. The number one priority is to get them appointed on your calendar. Now, once they're appointed, this is where there's some differing practices and views, right? However, what I believe is you want to do everything you can to persuade them to complete a digital mortgage application. Now, I see some loan officers complete this application verbally over the phone. It all depends on the quality of your business and the sources of your business. You understand? However, you don't want to go into that first appointment without getting an application completed. Now, we never use the word application. We use the word questionnaire because application is very pressuring. Right? People think they're applying for something. Yes, they're going to click the apply now button, but it's a questionnaire. It's a soft intake form where you can gather their basic cash, credit, and capacity qualifications. When you hire an assistant, he or she can do all that for you. But if you don't have an assistant, you are responsible for doing this. Get to the lead quick, get them scheduled, and persuade them to complete your digital application, aka questionnaire, in advance of your actual initial loan consultation, right? Soon as you hang up the phone, first person you're updating is the referral source. You're thanking them for referring you. And this is where the magic now happens, is the second part in this entire process, which is the initial loan consultation, right? Otherwise known as the ILC. Now, I cannot stress enough how important this is. This is really your first impression. This is your layout call. This is where you're understanding at least 7 to 10 points of what this home buyer needs. Low-level loan officers They have no structure. They have no process when it comes to this. You understand? They're winging all of it. They get on and they're just vomiting just a bunch of features and benefits. Low-level loan officers talk interest rate. High-level loan officers, they don't talk interest rate. They talk interest rate at the end. The first things they're doing is they're building rapid rapport. They're doing discovery questions. They're setting an agenda because everybody is silently begging to be led. You're the professional. They want to understand what's happening on that call. There's a lot of science behind this actual call, okay? So once you get on, right, you will basically go through your entire mechanisms to understand what it is they need, okay? On this call, you're obviously going over the application. You're qualifying them around their down payment goals, around their income goals, right, around their credit situation, and you're prescribing to them what their pre-approval parameters look like, right? And you're setting the tone of how you're gonna follow up with them. There's so many parts of this that in an extended playbook that's fully focused on this, I expand for you, okay? But if you do this right, these home buyers will get off the Zoom recording or phone call or in-person meeting feeling that's my guy. He understood me, right? That experience stood out over everybody else because he asked me the right questions and he was attuned with me. This has to be mastered, okay? From the ILC, which is the second stage, your ultimate goal is to get these people pre-approved, right? Pre-approved for a deal. They're out there, they're pre-approved, they're house shopping, right? They're looking for a place. This is now where everything comes together. You have gotten the purchase contract. These people are under contract to buy a home. You know what they're thinking. Their number one priority is to get a low interest rate, right? That's the natural knee-jerk reaction, is to think, am I getting a good interest rate? However, here's what I'll tell you about most home buyers, right? They do value service, expertise, and care. They do value education, and they do value loan officers that were involved with them from the very beginning, okay? How you did your initial loan consultation will set up your success for this rate lock consultation, okay? So much of winning this part is not only your quality of skills, but how well your referral partner referred you as well, okay? So when you're here, this structure is all broken down where you'll basically be able to go over with them their contract, review their financial goals, their terms that you guys all discussed, right? And then go in and lock the interest rate. There's a lot of sales and closing nuances that I go through, but if you do the right ILC, it will set up the right RLC. They're in rhythm. They're like peanut butter and jelly, Thelma and Louise. They flow with one another, okay? How well you do that ILC will set up your RLC, but it's gotta be structured. This must be a Zoom meeting. The most effective way to win your borrowers is in person physically. Your clientele, they may want to come see you in the office. If so, great. The second most effective is through Zoom meetings. Facial recognition is directly correlated to increasing sales conversion. You understand? So you want to do what you got to do to get these people on a Zoom. You can also read body language, right? If there's two people on the call, husband, wife, right? Boyfriend, girlfriend, father, daughter, you will read body language to make sure through that body language, they're speaking the language of commitment to you. So if you can't see that, it's very hard to be attuned. And of course, the last is the phone. You never want to do this rate lock consultation over email. Very few loan officers can do them as effectively as possible, right? From there, you've hopefully gotten them to close on their home loan. You've locked the loan, you put it in underwriting, you've gotten to close. Now, this is the part where I discussed earlier, is where the magic happens, okay? This is where a lot of loan officers fail, is right here, which is the post-closing consultation, the PCC, okay? This is where a lot of loan officers fail. I had said earlier that once you close a transaction, the relationship starts. A lot of loan officers try to make the relationship first to get the transaction. People just want a great home loan, right? They trust you enough to consider working with you to get the financing, but if you want them to be a client for life, a raving fan, the sale actually starts after the sale ends. You understand? So a loan officer's income, your salary is purchase business. Your bonus income is refinances. Your residual income is repeat purchase business. You understand? There's 3 levels to your income, but you cannot get that income and you cannot earn it unless you stay in rhythm with your clients. So many loan officers work so hard to get new clients, they forget to keep them, okay? So what you have to do is, as soon as they close, 7 days later, every single Thursday morning, you have to have 1 hour time block, which is an appointment with yourself, that no one is allowed to make an appointment during that time. It is a sales call. You are reaching out to every closed client spontaneously. Spontaneously. What these are is what I call SPCs, spontaneous planned calls. To the home buyer, they're spontaneous. To you, it's planned, right? So you call them without an appointment and you follow a framework, right? To make sure that A, you protect your long-term residual income, you protect against early payoffs. Now, if you've been in the mortgage business a long time, you know the nastiest, dirtiest, scariest acronym is EPO, early payoff. If these home buyers go and sell the home, refinance the home, or pay off that loan within 6 months of you closing them, that original investor can come back and claw back your full commission, right? So there's language in the playbook that will prevent any of your new homeowners, any of your new recently transacted home buyers and clients to not basically pay off the loan. Most loan officers, they get dinged that way if they don't leave that language. The other thing we're gonna do on this call is you're gonna future frame how you're gonna follow up. You're gonna honor them and thank them for the business. You're gonna educate them on servicing, escrow transfer, property tax exemptions. You understand? You're gonna talk to them about potentially removing their PMI in the future. You're gonna essentially incubate them and indoctrinate them that you're their lender for life. That anyone that reaches out to them to potentially refinance doesn't have their best interest, and that you do, and that you will handle their future refinances, right? There's a lot of future framing that happens there. Once that's done, one of the things that you're going to plant a seed there is the final point of sale, which is going to be the annual mortgage consultation, okay? Very few loan officers do what's called this AMC. Some people call it an annual mortgage review, an AMR. There's different names, okay? This should happen every single year at the home loan anniversary date. It's like a mortgage checkup. It's like you going to the dentist and getting your teeth cleaned once a year, going seeing your primary care physician, going seeing your accountant once a year. You're a loan advisor, I understand? They don't call your tax accountant a tax officer. It's a tax advisor. It's a legal advisor. It's a financial advisor. You're a loan advisor. Transactional loan officers only show up when their transaction is to be had. But loan advisors show up when there is a transaction to be had and not to be had. That is the key, right? So the purpose of this call is that once a year you will reach out, okay? And you will do a full review of their current mortgage. This is not a refinance call, but it's just a review. You're gonna go over their current mortgage. You're gonna see, can you drop their PMI? Can you have them pay a little bit more towards their mortgage because they have long-term, equity goals, right? You want to start having them open up and tell you if they're thinking about buying another home, a second home, an investment property. You might even hear some unfortunate news that those people are getting divorced or someone passed, but you got to stay in rhythm and in forever flow with your database. Remember, every client you close, every customer you close should shave 1 year off at the end of your career. You will start off realtor heavy, but every transaction you close should reduce your emphasis on getting realtor business. One client closes, you need one less realtor. You want to get to the point where you have 30% client business. So now listen, if you are a newly licensed loan officer, a seasoned loan officer, I want you to remember this. If you ask any tenured loan officer what one of their top regrets is in their business, it's not taking great care of their closed database. Right? They have a lot of what's called database decay, and they're getting root canals. You understand? So how you prevent the painkillers is by taking the vitamins, right? And taking great care of your closed database from day one and forever. So you don't have the regret of pain. So if you're building your business, start with good habits now. If you've been in the business a long time, as they say, the best time to plant a tree was 20 years ago. The second best time is now. In this playbook as well, if you have not done a good job of staying in rhythm with your closed database, I explain what's called the apology reset calls, right? So you don't have to have any reluctance to call the database. you will learn how to reach out and percolate them again. Because at the end of the day, you want to have a database of 1,000 to 2,000 to 3,000 happy customers and clients. And then they start referring you. And don't you ever forget this. You know, one of the most powerful statistics that has come out from the National Association of Realtors is that realtors have only about a 12% retention rate off their closed database. And almost 80% of every realtor's closed client would gladly use that same realtor again, but only 12% do. It's 100% because of a lack of follow-up. Follow-up doesn't even take skill. It just takes commitment and discipline. Every customer you close, you have a responsibility to call them and thank them, honor them, educate them about their new mortgage, and to protect your investment and future transactions with that buyer. So that being said, in this playbook, you're going to get the overview of the lead to consultation, okay, which will break the general theory around this. The initial loan consultation, rate lock consultation, post-call closing consultation, annual mortgage consultation. You can take your buyers through each stage, right? And help them feel that you took great care of them with structure. You will make a lot of money. And remember, process is greater than personality. Your personality and your charm will only take you so far. Professionals work in the pocket of process. So if you're a loan officer at whatever stage in your business, okay, I want you to level up and be the best. Click that subscribe button. Every single week at a minimum, I'm giving gems on this channel that I've learned as a $1 billion plus individual producer, a $10 billion plus branch manager, executive, and now what's known as one of the top, if not the top loan officer coach in the world, coaching over 50, $100 million loan officers, these same techniques and practices. This is the Harvard MBA of loan officer marketing, sales, ops, and finance. Hit that subscribe button. Let's go.